Hi everyone, this is Rob Roy of Elliott Options, and welcome to this trade review of our recently closed trade ID number 522. This was on the XLF, which is the ETF for the financial sector. Interest rates going up in 2022 made sense to look this direction. This was a long call in our impulse or directionally based portfolio. I'd like to draw your attention over here to the mark-to-market graph. As you can see, at one point in time, this position was at a 76% loss before rebounding to a 26% gain. On the entry alert that was sent out, you can see the chart was showing that the stock was in an impulse wave 5 and it had a supportive DMI saying that it was likely that this trend was going to continue. So this brings up the question of when a stock goes the wrong way, what do? I'm not necessarily a fan of having just a plain vanilla stop loss system where you exit a position when you have X percentage profit or exit when you have an X percentage loss. I think every trade needs to be looked at on its own merit, and then sometimes an adjustment might be prudent rather than just simply exiting it. This was the case here on the XLF. As you can see, the stock was going the wrong direction. It came down, but it's hit a level right of strong support. This was resistance going back to July, August, which was tested and became support throughout the rest of the year. And in addition, it was oversold short term. You can see that distance from the 10-day moving average. So it made sense that, hey, instead of just closing this out and taking the loss, perhaps we can add some more calls here, make an adjustment. I know some will say, oh, you're just DCAing, dollar cost averaging down until you're eventually right. I'm not a fan of doing that either. I just think there are times when perhaps that makes sense. And in this case, it worked out well. Right after we made the adjustment and added more calls, the stock turned and rebounded, or the ETF turned and rebounded to the upside. In the end, this allowed us to take that 176% loss and close it out at a 26% gain. Still only 27 days in the trade. Now there wasn't two adjustments here. You can see adjust two. We closed the position out in two different alerts as to not confuse our subscribers because the adjustment wasn't the same strike as the original alert calls. And then I posted a comment on our website, and we can tag them to the individual alerts. We'll do that from time to time when I like to share some more information about an alert that was closed. I hope you found this informative. Look forward to talking to you again next time. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.